Very good afternoon, all the viewers. Hope you are doing good. May blessings be upon you all. Welcome to Commerce First Year class. Yesterday, we had discussed adjustment entries for preparing final accounts. As I told you, there are a number of adjustment entries, but then we are taking only 5 to 6 adjustment entries which are expected in your IP exam. And we discussed those 5 or 6 this adjustment entries and also their effects. I told you what is the speciality of adjustment entry. Adjustment entries will appear twice. Adjustment entries will appear twice. Once in trading or P&L account and once in balance sheet. Okay, adjustment entries will appear once in either trading account or P&L account and once in balance sheet. Okay, so we discussed and also we have discussed the effects. Like say for example, outstanding salary is there. Okay, prepaid insurance is there. Depreciation is there. Bad debts is there. Provision for bad debts is there. Closing stock is there. We have discussed what are these items and their effects in trading or P&L and balance sheet. Today, we will be taking up questions on questions where we are asked to prepare trading P&L account and balance sheet, that is a final account with adjustment. This is what you will get for 20 months. So I am taking question number 1 of page number 327. Guys, we are doing question number 1 of page number 327 of your academy book. And what are we asked to prepare? We are asked to prepare trading account, P&L account and balance sheet. So let us get ready with the format. Yesterday I told you, no, first we will prepare trading and P&L account simultaneously, then we'll take up the balance sheet. Ready? Trading, P&L, and then in the next slide we'll take this balance sheet. So, what does the question says, you see? From the following trial balance will be the question. I should say for preparing trading P&L account and balance sheet, trial balance will be the question. So from the following trial balance, prepare final accounts of Satish Traders for the year ended on 31st March 2018. So we are preparing trading account of Satish Traders for the year ended on 31st March 18. Similarly, this is profit and loss account of Satish Traders for the year ended on 31st March 2018. Particulars. Particulars. Okay. So first we are preparing trading P&L account and then balance sheet, taking into consideration the adjustment entries. So first let us see what are the adjustment entries. Closing stock, as always, closing stock will be given in adjustment only. Okay. Then outstanding stationery. So we have adjustment on stationery, printing and stationery. Depreciation on machinery. So machinery we have adjustment. Bad debts. Then this is adjustment on debtors, I should say. In trial balance, debtors is given as 12,000, no? So this 500 we have to deduct from debtors. So it's an adjustment on debtors. Prepaid wages. This is adjustment on wages. Prepaid wages means wages paid in advance. Maybe wage of the next year paid in the current year. So that we have to deduct. So let us start with the first item. The first item given is closing stock. What is the first item given? It is, sorry, opening stock. Opening stock will appear on the debit side of trading account. So I am taking opening stock, debit side of trading 1,000. Cash in hand. This is a balance sheet item. Let us skip here. Cash at bank, balance sheet item. Then we have purchases. We have purchases. Purchases are given as 11,000. This 11,000 I am writing in the inner column because we may have purchase returns. We may have returns outward. Those are to be deducted from purchases. Next we have wages. Wages is also a trading item. Wages amount is 3,000. This also I am writing on the in the inner column because if we have gone through the adjustment entries, no, there we have seen we have prepaid wages. So we have to give a effect to that. So I'll write this in inner column. Then we have returns given on the debit side. Remember, I told you if returns are given in the debit column, they are sales return. Returns given in the debit column means sales return, and returns given in the credit column means purchase returns. Okay? Sales return in the debit column, purchase return in the credit column. Okay? So returns on the debit side are what? Sales return. Those are to be deducted from sales. So I am writing the returns amount here. Sales we will see when we will go to credit side. So returns are given as 1,000. Then we have carriage inward. Carriage inward we write in the trading account. Carriage outward we write in the P&L account. Carriage inward means carriage on purchase. Carriage inward means carriage on purchase, and carriage outward means carriage on sales. So carriage inward I have taken in trading account. Carriage outward I am taking in P&L account. I repeat, carriage inward means carriage on purchase and carriage outward means carriage on sale. Okay. Next, investments. Investments are assets. Again, these investments will go to balance sheet. Patents. Patents are also assets. Patents are a intangible assets. Will show in the balance sheet. Salaries. Salary is a P&L item. Salary is a P&L item. I am taking on the debit side. There is no adjustment on that. I am taking in the inner outer column. Salaries is a official expense, let us say. Then legal expenses. Again, this is also a P&L item. Legal expenses. Then insurance is given. Even insurance is a official expense, P&L item. So salary is 1,300, legal expenses 600, insurance 800. Okay. Then we have drawings. Drawings are deducted from capital. In the balance sheet, on the liability side, drawings are deducted from capital. So I'll keep this for balance sheet. Next we have debtors. Debtors are asset. Debtors are current asset we will show in balance sheet. Discount. Discount on the debit side means it is a P&L item, which means it is discount allowed. An expense 750. 750. Printing and stationery. Printing and stationery. This item I will write in the inner column because if you remember, there is an adjustment on that. On whatever items we have adjustment, we will write it in the inner column. Remember, whenever there is an adjustment, you write that amount in the inner column like this because we have to give an effect to the adjustment. Then machineries. Machinery is a asset. Machinery is a asset that will go to balance sheet. Now coming to credit side, sales is given as 20,000. 20 minus 1, 19,000 are the net sales. Then returns are given. Just now I told you returns on the credit side means purchase returns. Returns on the debit side means sales return. Okay, if returns are given on the debit side, they are sales return. And if returns are given on the credit side, they are purchase return. So these are purchase returns which we have to deduct from purchases. What is the amount? 800. Deduct. So 10,200. Then capital. Capital will appear in the balance sheet on the liability side. I repeat, capital will go to balance sheet on the liability side. Okay. Then we have creditors. Creditor is a liability that will go to balance sheet. We have discount on the credit side of trial balance. If given on the debit side, it is discount allowed. If given on the credit side, it is discount received. Okay. So from the trial balance, we have taken the items which are of direct and indirect nature. The revenue items of direct and indirect nature. And we have prepared trading and P&L account. There are few items which are left, which we will take in the balance sheet. Now let us close this trading and P&L account. So before closing, we have to look at the adjustment entries. Closing stock. Remember, closing stock will once appear in the trading account and twice. And the second time, it will go to balance sheet on the asset side. Okay. Outstanding stationery. Outstanding stationery. Remember, when I wrote printing and stationery, I wrote the item in the inner column. So we have to add outstanding stationery. That is the amount due on stationery which we have to pay. This 600 amount we have not paid, which we have incurred for purchase of some stationery. So this is our liability. So we should first add it to printing and stationery as per accrual concept. Take 2,000 in the outer column, then show this 6,000 as a liability. Then depreciation on machinery. See, what is the value of machinery given? 6,000, right? The value of machinery is given as 6,000. On 6,000 is asking us to provide depreciation of 10%. 6,000, 10% would be 600. This 600 we have to deduct from machinery, we have to subtract from machinery, and also we have to show it as a expense in P&L account to depreciation on machinery. How much? 600, which we have calculated here. And then what is the second effect? We have to subtract it from machinery account. Next, bad debts. Bad debts means irrecoverable debts. The debtors, out of the debtors, 500 are such that you will not be able to realize amount. Maybe they have become insolvent. Okay, so this is a loss to us. We will write it on the debit side of P&L account and then also deduct it from debtors. Bad debts means irrecoverable debts which we have to deduct from debtors and show as a loss. Prepaid wages. prepaid wages, that is wages paid in advance, that we have to deduct from here. Prepaid wages. What is the amount given? 500. This 500 we have to deduct, and this 500 amount we have to show in balance sheet on the asset side. On the asset side. Prepaid means paid in advance. Paid in advance is our asset. Okay. So let us close trading account and see what is the gross profit and net profit. Hope you understood this. So simply, you can back 20 marks. So easily, you can earn 20 marks. So let us close this. See what is the credit side total? It is 20,100. 20,100 on the credit side. Then again, write the same figure here, 20,100. So credit side total is 20,100. And debit side you see 11 to 13 to 13 7, 14,700. The total on the debit side is 11 to 13 to 13 7, 14 7. So what is the balancing figure? 400. Okay. And then 5,400. So we have a gross profit of 5,400. Sorry, this is 21 item. This is 21. 19 plus 2, 21. So we have 6,400. 6,400 to gross profit carried down to P&L account. To gross profit carried down to P&L account. Okay. Then, so we show this gross profit on the credit side of our P&L account. Here, in the P&L account, we will take by gross profit brought down 6,400. Right? Now let us close profit and loss account. 64 plus 8, it is 7,200. Okay. What is it? It is 7,200. The total on the credit side is 7,200. See what is the total on the debit side. 5 plus 13, 18, 24, 32, 32, 52, 59, 59, 65, 7050. It is 7050 on the debit side. The debit side total is 7050. So we have a net profit of 150. What is the net profit? We got a net profit of 150. This net profit will be carried down to balance sheet. Net profit carried down to balance sheet. Where do we show in balance sheet? We will add net profit to capital account. Okay. On the liability side, we'll add this to capital account. So we are done with trading and P&L account. Now let us take the balance sheet. Let us take the balance sheet. Balance sheet of Satish Traders as on 31st March 2018. 31st March 2018. This is asset side. This is the liability side. Balance sheet is a statement. We don't have debit and credit. Okay, it is a statement. Now go through the trial balance. While preparing trading and P&L account, what all items we have left, those will appear in balance sheet. So starting from debit side, opening cash in hand. I told you cash in hand and cash at bank are assets. Cash in hand 600, cash at bank 1500. Cash in hand and cash at bank both are assets. Then carried inward investments. Investments are also assets. Investments are also assets. Patents. Patents are also intangible assets. Patents, goodwill, trademark, copyright, brand, all these are intangible assets. Intangible means these are the assets which we do not see, though they exist. We do not see, we cannot touch them, we cannot see them. Such assets are called as intangible assets. So patent is one such asset. Then salaries, legal, insurance, drawings. Drawings we will deduct from capital. Drawing given on the debit side of trial balance, we will deduct from capital 1000. Then debtors. Debtors are assets. This debtors amount of 12,000, I will write in the inner column. Sir, why are you writing? I told you no. Whenever there is an adjustment on any of the item, we write the amount in the inner column. So what is the adjustment on debtors? Remember, we have bad debts. Bad debts means irrecoverable debts. Those we have to deduct from debtors. Then debtors, discount, printing, machinery. Machinery is an asset. Machinery, I am writing again in the inner column. Why? Because we have depreciation. Coming to credit side, sales we have taken, returns we have taken, capital. Capital 40,000. Then creditors. Creditors are a liability. Okay. Then additional information. Closing stock. Closing stock will appear once in trading account and once in asset side balance sheet 2100. Outstanding printing. Outstanding printing means it is the amount due which we have not paid. So that is a liability. Outstanding stationery is the amount due which we have not paid. It is a liability. Depreciation on machinery. We have calculated no 600, 10%, that we have to deduct. Depreciation at the rate of 10%. So after depreciation, machinery value is 5,400. Then bad debts. Bad debts are deducted from debtors. Bad debts are deducted from debtors. Next we have prepaid wages. Wages paid in advance. Wages paid in advance. That is a asset for us. Any expense paid in advance is a asset for us. Wages prepaid are 500. So our adjustments are all done. Now let us balance. Let us do the total, I should say. Okay, one more thing. Remember, we prepared trading account and we had a net profit of 150. That net profit we will add here to capital. Okay, so 150. So this would be 39,150. This I have deducted. 150 I have added. See the total on both the sides. See the total. 39, 43. It is 44,000 on the liability side. 12, 22, 23, 24, 25, 26. 8, 3, 8, 7, 5, 12, 22, 23, 23, 24, 5, 24, 5, 25, 26, 56, 38, 38, 600 we are getting. We are missing something on the asset side. I think we missed something on the asset side. We'll go through once. Investments 10,000, patent 7,000, salaries, no, legal, insurance, drawings, debtors 12,000. Okay. Then machinery 6,000 minus 6, 5. We don't have anything. 7 plus 5, 12. Okay, we'll do this way. 22,400. 6 plus 5, 2,100. 11, 12, 11, 5, 12, 13,100. What the heck we are getting? 4, 5, 6, 2, 2, 4 plus 3, 7. We are getting 37,600 only. Cash in hand, okay. Okay. Cash in hand is 6,000. Cash in hand is 6,000, where I took 600 only, it is 6,000. So now 7 plus 5, 12, 22, 4, 28, 4, 28, 29, 29, 13, and 44,000. Yes, it is correct. So what was the mistake? I took cash in hand as 600, where the actual figure is 6,000. Okay. So this way, the total on asset side and liability side are both same, which we should have actually, because we prepare balance sheet on an accounting equation. No, what is accounting equation? Asset is equal to capital plus liability. Okay. Chalo, hope you have followed this. Then we'll take one more question. Second question. Outstanding prepaid provided. Okay, we'll take question number 3. We'll not take question number 2 because there are adjustments which, as I told you, will not be asked in your IP. We are getting familiar with 6 adjustments which are expected to appear in your IP. See the adjustments: outstanding salary, closing stock, prepaid insurance, outstanding wages, depreciation. Okay, chalo. So we'll prepare this. So first let us get ready with the format. Let us get ready with the format. For what? For trading account, P&L account, and balance sheet. What is the name of the firm given? The name of firm is Sachin Traders. Okay, so trading account of Sachin Traders for the year ended on 31st March 2019. Trading account of Sachin Traders for the year ended 31st March 2019. Particulars amount, particulars, amount, ready? Chalo, we'll begin. Let us first prepare trading P&L account, then leave the items of balance sheet and take balance sheet in the end. First item is, okay, first see the adjustment entries, outstanding salary. There is adjustment on salary, closing stock, prepaid insurance. So item, adjustment on insurance, outstanding wages. We have adjustment on wage, depreciate machinery. So we have adjustment on machinery. First item is cash. Cash is an asset. Then we have purchases. Purchases, trading, debit side. How much is the amount? 5,000. I am writing in the inner column because we may have returns on that. Then wages. Wages. Wages are given as 1,000. I am writing that in the inner column because we have outstanding wages. Then opening stock. Opening stock will be taken as the first item of trading account. So what is the opening stock? Opening stock is 2,500. Then salaries. Salary, again we have adjustment. Salary is a P&L item. Salary I am taking in P&L account. Debit side, amount is 1,000. I am writing in the inner column because we have a adjustment on that. Insurance. Again, insurance is a P&L item. On insurance, we have adjustment. I am writing insurance in the inner column, 900. Wherever we have adjustment, that particular item, you write in the inner column. Okay, you write in the inner column. Next, we have carriage on purchase. Carriage on purchase is a trading item. Carriage on sale is a P&L item. So carriage on purchases. Carriage on purchases, 500 rupees. Furniture is an asset. Furniture is an asset. Sales return. Sales return will deduct from sales. Sales we have not arrived at. Sales return is given. Sales return is given as 600. I'm just writing the figure here. After we write sales, we will deduct it. Rent is given. Rent is a P&L item. Rent is a P&L item. I'll take it on the debit side as 800. Then we have machinery. Machinery is an asset. It will go to balance sheet. So now, as of now, we'll keep it aside. Debtors. Again, debtor is a current asset. It will go to balance sheet. For time being, we'll keep it aside. Discount. Discount on the debit side means it is discount allowed. It is discount allowed. What is the amount? It is 400. Then we have bills receivable. We have bills receivable. Bills receivable again is an asset. So let us keep it aside. Then taking the credit side, bank overdraft is a liability. Bank overdraft is a liability. Then sales. Sales are given as 9,000. 9,000 minus 6,600 is 8,400. Then we have purchase returns. Purchase returns 500. Deduct that 4,500. Then capital. Capital will go to balance sheet. Commission received. Commission received is a P&L item. 1,200. Then creditors. Creditors are a liability. They will go to balance sheet. Okay. So we have taken those items which are of direct and indirect nature, revenue items from the trial balance. Now let us see the adjustments. Remember guys, adjustments will have dual effect. Adjustment will get once in trading or P&L account and once in the balance sheet. So what is the first adjustment we have? It is outstanding salary. Outstanding salary is a liability. It means the date is gone and we have not paid, the firm has not paid salary to the employee. That becomes a obligation. We have to add outstanding salary. And then this 500 is to be shown as a liability. We have added it to salaries now and we have taken total salaries as 1500 in accordance to accrual concept. And then we will add this 500 in the balance sheet on the liability side. Closing stock. Closing stock once will appear in the trading account here and then it has to be taken to balance sheet asset side. Prepaid insurance means insurance premium paid in advance. This 400 rupees is the amount pertaining to next year. This is the amount related to next year which we have paid in the current year. This is deducted. Prepaid insurance is deducted. We take 500 and then again this 400 will be shown as an asset. Any expense paid in advance in the current year which is pertaining to next year, it will be an asset for the current year. Any expense paid for the next year in the current year. So for the current year, it would be an asset. Then outstanding wages. The data is gone. We have not paid wages to the labor. So it is a liability. We add outstanding wages. We add. What is the amount? 300. Outstanding wages are 300. So here we'll take total 1300. And again, this 300 is a liability we show in the balance sheet on the liability side. Depreciation. Depreciation is calculated on machinery at 10%. You see in the trial balance, machinery is given as 5,000. So on 5,000, if you calculate depreciation at the rate of 10%, 5,000 into 10 by 100, it will be 500. Okay, so we have prepared trading account and P&L account successfully by taking all the items given in the trial balance. Now let us close these two accounts and find out what is our gross profit and what is our net profit. See the total, 12,900. Credit side total is 12,900. 12,900. And what is the total on the debit side? 783758588. 8,800. So gross profit is 4,100. 4,100. This is our gross profit. To gross profit carried down to P&L account. Gross profit from here, it will be transferred to P&L account. This 4,100 will show here as by net profit, by gross profit brought down. By gross profit brought down. Now let us close P&L account. Let us close P&L account. What is the total? 5,300. See the total on the credit side, it is 5,300. And what is the total on the debit side? What is the total on the debit side? 2,832, 3,700. So we are getting 1,600 as the difference, which is our net profit. To net profit carried down to balance sheet. To net profit carried down to balance sheet. This is our 1,600 is our net profit, which we have to show in the balance sheet. we have to add it to capital. Now, let us prepare balance sheet. So let us draw the format for balance sheet first. Balance sheet of Sachin Traders as on 31st March 2019. 31st March 2019. What are the items which we left while we were preparing trading P&L account? Those will appear. So what is this left hand side? This is our liabilities. Liabilities are the obligations. हमारे फॉर्म के कर्ज है ये, कर्ज, okay, which we have to pay to outsiders. So let us begin with what all items we have left. See what is the first one. Start the trial balance again from the debit side. Cash. Cash is an asset. Cash is an asset, and cash is given as 3,000. Cash is given as 3,000. Purchases, wages, opening stock, salary, carriage, furniture. Furniture is a asset, fixed asset. So we'll write furniture. It is 2,000. Furniture is 2,000. Then rent, machinery. Machinery is again asset, 5,000. That I'll take in the inner column. Sir, why are we taking in the inner column? Because we have depreciation on machinery that we have to deduct. Then debtors. Debtors are a current asset. Debtors are also asset, but we don't have any adjustment on debtors. As such, I'll take on the in the outer column. Then bills receivable, even that is a asset. Bills receivable is also asset. I'll take on the asset side 1,000. Okay. Then credit side, we have bank overdraft. Bank overdraft is a liability. Bank overdraft is a liability. We'll take it on the liability side. Then capital is given. Capital. Capital 15,000. Capital 15,000. And we have creditors. We have creditors. Creditors are given as 1,000. Okay. So now we have taken all the items of balance sheet from the trial balance. Now we have to take items which would appear in balance sheet from the adjustments. Almost all the items will appear, no? Outstanding salary. Tell me, is it not an obligation? Is it not a curse that the date has passed, but still the firm has not paid salary? Yes, of course, it's an obligation. So all obligations are our liabilities. So this 500, I'll take on the liability side. Outstanding salaries. Adjustment entries are special entries which will have dual effect. Once in trading and P&L account, if you see outstanding salary I have taken here 500, then again I am showing it as a liability because that is what adjustment entries are. No, adjustment entries will have dual effect. Closing stock. Closing stock once we have taken in trading account on the credit side, and then again now I will show it as a asset. Closing stock 4,500. Closing stock 4,500. Next, prepaid insurance. Prepaid insurance. Any expense paid in advance is a asset. Prepaid insurance 400. Prepaid insurance 400. Then outstanding wages. Outstanding means date has passed and the amount is not paid. Due date is passed but the amount is not paid. It's an obligation. Outstanding wages 300. Depreciation on machinery. We have to deduct from machinery. 500 we will deduct and we'll take 4,500. And what is one thing we have to take here? We have to take the net profit 1600 and add it to capital. So add net profit 1600. This would be 16,600. Okay, now let us see the total on both the sides, asset side and liability side. Okay. Sixteen, 17, 18, 19,400. 6, 5, 7, 5, 10, 5, 14, 5, 18, 5, 19,400. Done. The balance sheet is done. And we got the right total on both the asset side and liability side. Remember, every time I tell you, balance sheet is prepared basing on a accounting equation which says assets is equal to capital plus liabilities. So whatever it is, the balance sheet always should tally. Total assets should be equal to capital plus the other liabilities, isn't it? That's it. Okay. Now, so today we'll just again take all those adjustment entries and revive once and see the effects once more. What is the first adjustment entry every time we are getting? That is closing stock. Closing stock is the unsold stock left as on 31st March or as on 31st December with the proprietor. This will have dual effect. First, it will be shown in trading account on the credit side. And second, it is shown in balance sheet as the asset. These are the two effects. Second, we have outstanding expense. Any expense which the due date is gone, but the firm has not met, but the firm has not paid. For example, outstanding salary. Okay, the date is gone, but the firm has not paid salary to the employee. So it is an obligation. So this should be added. This should be shown in P&L account, debit side. How it should be added to outstanding salary? It should be added to the salaries paid. Suppose, I'll give example, out of 12 months, the firm has paid salary for 11 months. Let us say 10,000 salary. 11 into 10, 1,10,000 is the salary paid. It is the salary paid. And they have not paid for 1 month. 1 into 10,000. So this is 10,000. This amount is called as outstanding salary. While preparing P&L account, we have to show total 1,20,000. What is the salary paid? 110. How much is still to be paid? 10. But while preparing P&L account, we have to show total 1,20,000. And then again, we have to show this 10,000 as a obligation, as a liability, because it is not yet paid. So in P&L account, what do we do is, in P&L account, we will show it as an addition to salaries paid. We will add to salaries paid. Outstanding salaries are added to salaries paid. One. Second, we will show it as a liability in the balance sheet. Show it on the liability side. Okay. Then third one is prepaid expense. Familiarly, we'll get prepaid insurance. This is the insurance premium of the next year paid in the current year. So it is a asset for us. But first effect is in the P&L account on the debit side, this amount prepaid insurance is deducted from the actual insurance paid. Deduct from insurance paid. And the second effect is show it as a asset. Show it as a asset. Then fourth one, it is bad debts, I told you. Bad debts are what? Bad debts are irrecoverable debts. The amount which we couldn't realize because of the insolvency of the party, the debtor, or because the debtor is absconding, we are not in a position to realize that amount. So that again is a loss to us. So we'll show in P&L account debit side. This is the first effect. In P&L account, we'll show it as a loss. Then again, in balance sheet, okay, on the asset side, we deduct bad debts are deducted from this is all. Then we have depreciation. Depreciation on fixed assets. Say depreciation on machinery is there. Depreciation means it is a decrease in the value of an asset. It is the decrease in the value of an asset. Obviously, if the value of asset is decreasing, it is a loss to the firm. Okay, so it is shown as a operating expense. So what is the effect? We calculate. Normally, it will be given as a percentage. So we calculate that percentage on asset, and that, like say, for example, machinery is given as rupees 80,000 and is asking us to depreciate machinery. Depreciate machinery at 10%. So what do? We calculate depreciation as 80,000 into 10 by 100. That is 8,000. This 8,000 we will show in P&L account debit side as a operating expense. Then in balance sheet under the assets, we show machinery 80,000 minus depreciation 8,000, and the net book value of machinery will be shown as 72,000. So what are the two effects of depreciation? One, P&L account debit side. Two, it is deducted from machinery. Okay. So then we have provision. The last adjustment I should say, provision for bad and doubtful debts. Bad and doubtful debts, or provision for bad debts, like that it will be given, or sometimes they'll give it as reserve for bad and doubtful debts. One and the same. Reserve or provision. Provision is the correct word. So provision for doubtful debt is to be created, right? Bad debt. What are bad debts? Bad debts are actually the amount which we have not, which we couldn't realize. It is amount which is gone, right? But provision for bad debt is in anticipation of a loss. We are creating a provision. We are anticipating that so much % of debtors may not be realized. How do we do that? We do it out of our past experience. So say if the debtors are given as 30,000 and we are asked to create a provision of 5%, then what do? Provision for bad debt 30,000 into 5 by 100, that is 1,500. Okay, 1,500 is the provision. So where do we show it? The provision for bad debt will show in P&L account on the debit side, and in the balance sheet on the asset side, same from debtors. What is the debtors given? 30. From debtors, we will deduct the provision for bad debt 1,500, and debtors will show as 28,500. So what are the two effects if I ask you? One is provision is shown in P&L account debit side. Second, provision is deducted from debtors in the balance sheet on the asset side. Okay, so these are the 6 adjustments which we expect in the exam. If you get a good command on these 6 adjustments, it is more than enough. You will definitely be able to attempt it and score 20 marks for this final accounts question. Okay, so here I am concluding today's session. We'll continue tomorrow doing few more problems on final accounts. Okay, so take care. Goodbye.